What is going on, guys? Welcome back to another video. Hopefully every single one of you is keeping well. So guys, in today's video we're going to be taking a look at the silver bullet strategy by ICT. I actually find this strategy very interesting because it's very similar to everything that I do, except I've never taken time into account. That's actually very important. And I realized after looking into a lot of silver bullet videos that a lot of people don't really know how to trade this properly. Now, I'm not here to teach you about ICT concepts. I'm not here to teach you the right or the wrong way. I'm simply here to teach you my way, and that's the way that makes me money. It's how I do it, not how to do it. So in this video, guys, we're going to be taking a look at the silver bullet with a twist. I'm going to be showing you an extra tool that I add onto my analysis that increases my win rate from about 40% using the silver bullet to about 60%. Now, 60% with 2 to 3 R on every single trade, that's extremely profitable. A lot of people have a fairly bad expectation of how much they should be making. And if you backtest this, especially using FX Replay or any of these backtesting softwares, you'll be able to see that with around 1% risk, you're making about 5 to 10%. On most months, in a few months, you're going to be losing about 5% or so, which is extremely good. Now guys, before we get started, make sure to go ahead and click the subscribe button, drop a like, all that good stuff. And the most important thing is to drop down to the description and join the Telegram link. This is where I share a lot of my analysis, a lot of my thoughts, etc. With that being said though, guys, let's get straight into the video. Okay guys, so here we are on the chart. Now I assume every single one of you already has a fairly good idea of what the silver bullet strategy is. I'm not going to go through 100% of it. I'm just going to show you kind of my way of going about it. So for me, the silver bullet strategy essentially has worked the best on GU. I know a lot of people look at it on US 30 and NAS 100, but I don't really trade indices that much. Maybe it might change in 2024, we'll see. But that's what I look for. One of the main things that I feel a lot of people, first of all, lose the silver bullet strategy is that they fail to take trades with the trend. All they care about is just the liquidity grab, and straight away they're just taking the position. The silver bullet strategy for me essentially is just a method of entry, but I still need to have a higher time frame bias. This is extremely important. So for this trade, that played out extremely nice. What we had, so obviously this trade happened yesterday, and I didn't take this trade, I'll tell you up front, because I'm simply not trading for the rest of the year until January. But this trade was absolutely perfect. Taking a look at the higher time frame, we can see that the market, first of all, is going up, and this candle already broke the previous daily high right here. So indicating that overall we were going to most likely be targeting these highs right here. So that's that weekly high. So taking a look at the 1 hour time frame as well. Okay, if we take a look at the 1 hour time frame right here, everything is bullish. Very strong bullishness to the upside. Next, what I do, of course, is I look and mark out my 2 areas of liquidity. So here's where a lot of people would get confused right here, and they would have seen this consolidation. Remember, this consolidation usually happens just before a session. We target these lows right here and these highs, and what a lot of people will do is they'll wait for one of these to be broken, and once one of these gets broken, oops, going back here. So when one of these gets broken right here, people will look to wait for a change of character, etc., and trade in the opposite direction. So straight away we have this FVG right here. So what I'm using is this silver bullet indicator, and all I'm using it for is just to mark out my sessions, and that's all. Everything else I don't care. I don't need it to mark out my FVGs for me. I don't need it to mark out break structure, etc. Don't need none of that. A lot of people straight away are looking at this buy. We get a change of character right here, and they're looking at the sell, sorry. And what they'll look for is this. A retest back up, okay? And then they look to short. And I'm in a few Discord groups, and I've seen a lot of people take this short. And I'm going to show you my method of how I actually avoid these low probability setups. So one of the first things is always the higher time frame. Still, a lot of people have a problem with this. I'm going to show you more of a more, let's say, clear way of looking at this. So the way that I would have looked at it is I would have actually bought here. So what would I have seen? I would have seen that, first of all, the first liquidity grab occurred in the silver bullet hour. Some people would be looking outside a little bit of the silver bullet hour. That's not really an issue for me. I'm not too strict on the silver bullet as long as it's kind of within a 15-minute time frame of the silver bullet on either end. This is the liquidity grab that I would have been noticing. the one with the structure. So I'm always trading with the structure. I'm never really trading against the structure unless we have some sort of a point of interest, which we did. So I'd understand why a lot of people would have been shorting from here. There's a decent amount of essentially resistance. Okay, we have this large order block right here that a lot of people would have been looking to short from. Why I didn't short is because I look at the order flow. I look at the strength of the buyers and sellers within candles. And this is why I believe that my way of looking at the silver bullet gives me a much, much better win rate. My trades are a lot more high probable in that sense. We take a look as the trade plays out, and as you can see, the liquidity grab occurred and we got that breakage structure. So the entry is the same. We get that breakage structure on the 1 minute time frame, and we have that FVG. So a lot of people will look to enter straight from the FVG. What I look to do is simply just enter a break and retest. So we broke, this is the low. Okay, that formed the lowest low. So I look essentially for here. Now this is debatable, didn't break this low, but what I would do is this is the high this is the high. Okay, so this is the high that formed the lowest low, which will be right here. And what I'd be looking at is this high to be broken, and that's essentially the change of character. Some people don't look at that. I wait for a change of character. Once that occurs, I simply just wait for price to come back down. I could literally just take the entry straight away from here as I retest this, or I could wait for this FVG. Up to you which way you want to enter. But I'll show you how you can confirm that this range right here is actually backed and supported by strong buying. It's very, very important that it's not just a pullback, because a lot of people get confused the difference between a pullback and a reversal. And I'm going to show you the tool and the method of analysis that allows me to do so. And I would simply target 2R. 2R I've found to be the absolute best target. And I'd wait for price to tap into my order block or FVG, whatever it is. I'd wait for price to tap in. Boom. Tagged into the trade. Instantly, I'm in the trade and I'm looking to buy. I could potentially target this high if I wanted to, or just to 2R. For this sake, we're just going to target this high, and it's going to give us to 2.6R. And as you can see, the trade worked out eventually perfectly. Cleared the high. Boom. How did I know that this was going to work out perfectly? How did I know? Let's take a look right now. The tool, guys, that I use is the order flow footprints. Okay, so taking a look at the order flow footprints is an extreme hack in the markets. What the order flow footprint allows me to do is it allows me to see the strength of the buyers and sellers on both sides. I can do delta analysis looking at the max delta and the min delta, and allows me to see the net difference between the buyers and the sellers. There's a difference between just looking at the volume, because the volume only tells you the size of the battle, but the net delta gives me the size of each side in the battle. So each army I'm able to tell, and with that you're able to tell which side essentially is winning, because just because a battle is very, very big, it could still be at a stalemate, but you could have a much, much smaller battle with at least like a less amount of soldiers in that battle, but one side is overpowering the other by a lot more. So this is what I would look at, and all I'd look at essentially is just the max delta and the mil delta. These are the two most important things for me. Straight away, as you can see right here, as we approached, so this was essentially, let's just take a look at the timing. It's very important. I'm on a 5 minute here. For hindsight's sake, looking at on the 5 minute is okay, because me scrolling all the way back, this doesn't have a replay tool. Like NinjaTrader doesn't have a replay tool, so it's difficult for me to go all the way to the 1 minute. But I'd be usually looking at it on the 1 minute. Just keep that in mind. Going all the way back, this is when that first initial grab would have happened. So this was on GU right here on the 1 minute time frame at about 254. So this is how I'd go about it. Look at 254, which is about, about 54. Oops, stop. Okay, so 254. The order flow can tell you a lot, right? And I know a lot of people have difficulty with it because it's not as mechanical as you'd like it to be. But what it does is it tells you a story. One important rule is always the law of effort and result, meaning that whatever occurs here should match here. If it's not matching here, that's an anomaly, and most likely the opposite thing is going to happen. So let's say, for example, here, we have a strong amount of sellers, right? Comparing the delta and the min delta. Look, if you don't understand that much about order flow, that's not a problem. I post a lot of order flow videos, so take a look at all my other order flow videos, and I'm going to be This is a beginner course on my channel as well for order flow. So take a look at that. But overall, what we can see here is clearly the sellers are in strength. Minus 32.4, minus 329 and 0. Minus 109 and 1. So the buyers are very, very, very low right here and the sellers are extremely strong. Price is going nowhere. This is an absorption showing that the effort is not matching the results. Although there's a strong amount of selling right here, and the effort, the result is that price is going nowhere. In fact, price goes the opposite direction, correct? Eventually, price actually does follow through. So look at the amount of selling. Okay, look at the amount of selling right here. It's a very, very large amount of selling. Minus 109, minus 329, minus 236, minus 275, minus 267. Big, big, big deltas right here. Big, big numbers. And the volume, look at the volume. Very, very intense. Okay. 1,000, 1,800, etc. And yet price failed to move. Like this was the low, 1.2741. And then here about 5 pips later, that's how far it went. That's the lowest it went. Straight away after all of that selling, look at how these sellers got absorbed, because although there's a huge amount of selling and no buying, price is going nowhere. And suddenly, now the sellers just disappear. Okay? They disappear in this candle. And then for the next candle, once again, the sellers are a little bit there, but the buyers are in strength. Once again, the buyers are in strength. Sellers step in once again, but straight away the buyers in strength. What you want to see, a lot of people get confused with this in the order flow, is they want to they see just one surge of a candle that just has a surge of buyers or a surge of sellers. We're not just looking at one candle. We're looking at a series of candles. They all have to be doing the same thing. So here we had a series of candles that all selling, but went nowhere. So this is the first sign that they're getting absorbed. Next, we have a surge. We have like here and there, we have some selling stepping in, some selling stepping in. But once again, price going nowhere. Some extreme selling stepping in, but price going nowhere. And then straight away, look, there's just 2 random candles showing us that sellers are very, very strong, but straight away the third candle is buyers are in control again, buyers in control again, buyers in control again. And as you can see for that range again, the buyers are in control. What has this showed me to do? Now, this is a little bit more of an advanced way of, this is a bit more of an advanced trade, but it is a very, very good setup. And this is looking at it from an absorption. Now, the market will give you other opportunities potentially that it's not an absorption and the effort matches the result, where you see a strong amount of sellers and the price will actually sell off, and a strong amount of buyers where the price will actually buy up. A lot of people will be like, well, isn't that just telling you things in hindsight? Well, it's not really, because if there was a large amount of sellers right at the top here, and you can see that, like for example, right here, this data and the amount of sellers and buyers stepping in here is going to give me a fairly accurate representation of the amount of buyers and sellers stepping in here. It's going to give you a very, very accurate representation. Now, remember that we're not taking a look at this on the 5-minute time frame. Most of the time, we're only taking a look at the data around these 2 candles on the 5-minute and these 2 candles, because that'll be 10 candles on the 1-minute time frame. That's what I'll be looking to do. So let me just go down to the 1-minute time frame, and then I'll be able to give you a better, closer look. So this is what it would have looked like on the 1-minute time frame. Look, sellers, strong selling, strong selling, strong selling. Price going absolutely nowhere, meaning that the buyers are holding this area right here. They're not letting it go anywhere. And then the buyers step in. Now the buyers are in control, buyers in control, buyers in control. And on that retest, I would have gotten in. So how did this tool help me? It helps me identify, is this push up right here strong enough in order for it to actually reverse to the upside, which, by the way, price goes all the way up and clears this liquidity right here. That's what it helps me does, because in a lot of areas, people don't actually know which is the stronger push, this push or this push. A lot of people struggle with this. Now, once again, if you don't understand much about order flow, I have prepared a free order flow ebook down in the description. I'm not trying to sell you anything. I don't sell order flow course anymore. I used to. Don't sell anymore. I don't sell anything. I'm literally just showing you the way that I do this and the way that I actually make money in the markets. That's all I'm showing you right now. But if you do want to take a look at that book, it's down in the description. It's only 20 pages. It's going to give you a fairly good understanding of order flow. And everything about order flow, I literally teach on this channel completely for free. So you don't have to pay for any courses, none of that whatsoever. So as you can see, this is it was a bit more of an advanced example. It was a little bit difficult, but the absorption here showed us that. See, price failed to go anywhere. Extreme amount of selling right here, which by the way, you would have never been able to tell. A lot of people, what they'd be like is the buyers and sellers are equal here. That's what people will think. looking at the candles on its own, people are saying the buyers and sellers are equal. Why? Because they believe that it's price. They only look at the price. They only look at it from this technical aspect right here of the ranges. But the ranges don't matter. In fact, here's a strong amount of selling, right? And then it's showing right here. See, the thing is, the strong amount of selling that occurred happened later. So the information that was in here actually was evident right here. But straight away, although we had that much amount of strong selling and that amount of strong selling right here, price literally did not go that far down. It only like went 5 pips lower. So that gives you insight into the fact that the sellers, no matter how strong they are, the buyers are still, the pressure of the buyers is still very, very strong from a volume perspective and also from the trend on its own. So this gives you clues. And with these type of clues, you're able to tell if your silver bullet strategy is actually going to work out or not. So that was a beautiful example that I wanted to share with you guys. Once again, check out the description for the breakdown of order flow and just get a beginner's perspective on order flow. But with that being said, I appreciate every single one of you for watching all the way through to the end. If you haven't already, join the free Telegram. The link is in the bio. I share in the description. I share a lot of insights, etc. And that's pretty much it. Drop a like, subscribe. I'll catch you guys on the next video. Have an amazing day.